Hello, hi, namaskar to all the viewers of this channel. I'm very happy to say that we are in the ending session of this depreciation chapter. Now I'm going to cover one more problem with provision for depreciation. After this, I go for miscellaneous problem, the sundry problems on depreciation. Chances are there that you might get those problems for 5 marks. If I complete this, immediately I go for starting a bills of exchange chapter, my dear students. Okay. Now me see here what happened in a class number 15 of the depreciation chapter. This question is asked in June 2023 for 10 marks. The old machinery problem we solved na? Hopefully in the class number I think it is on somewhere 12 13, I think 12 and 13 it seems, I mean not 12 and 13, I think in 10 and 11 we solved the old machines, dividing the machines into part 1, part 2, part 3. Like that we are having this type of problem. The following balances appear in the books of Dheeraj Enterprises. Machinery account on 1st April 2021. Provision for depreciation on 1st April 2021. So, this is a value of machinery on 1st April 21, value of provision for depreciation on 1st April 21. On October 21, machinery which was purchased on 1st April 2018. What? 1st April 2018. Costing how much? Rupees 2 lakh. Okay. Sold for rupees 1 lakh 10,000. This is sold. Sold on when? On 1st October 21. For how much? For 1 lakh 10,000. Please remember this particular point, which is very important. What is telling? On October 21, see here I am telling so clearly, on October 21, okay, purchased on April 18, okay, purchased on April 18, for how much? For 2 lakh, sold for 1 lakh 10,000. On the same date, my dear children, on the same date means on 1st October 21. Another machinery was purchased, means M2 is purchased for 4 lakh 80,000 rupees. The firm is charging depreciation, what percent? 10% under written down value method, means WDV value method. What we have to do? Prepare machinery account, provision for depreciation account, machinery disposal account. Okay. See what happened? Here they have given on April 21. Here they have given on 1st April 18. This is called old machinery. So now let us write. Depreciation is what percent? 10% under WDV method. Closing date. When the accounts are closed, obviously we can say that it is given on April, right? And for a year ending March 22, we have to prepare for March 22, means we have to prepare for only 1 year. They have given on March 22, means accounts are closed on 31st March every year. Okay, now let me move on. Note on old machinery purchased on 1st April 18. When it is purchased on 1st April 18. For how much it is purchased, that we can call it as part 1. Purchase for how much? It is being purchased for 2 lakhs. So now let us write 1st April 18 cost 2 lakh. Accounts are closed at the end of the year, March 19. Depreciation 10% WDV. Since purchased on April, closing on March, it is for how many months? 12 months. 2 lakhs into 10% into 12 by 12, it comes to rupees 20,000. Now let us write 1st April 19 as a balance 1,80,000. Now on March 20, depreciation 10% WDV for again how many months? For 12 months. It comes to 18,000. Now let us write 1st April 20 as a balance 1,62,000. Now let us write 31st March 21 depreciation 10% WDV again for how many months? Again for 12 months. It comes to 16,200. Now let me write on 1st April 21 as a balance. It comes to rupees 1,45,800. I stopped on 1st April 21 because the balance is given on 1st April 21. Okay. Now what to do? We have a machinery, we have a provision for depreciation. Now let us write note. Cost of old machine 12 lakh, provision for depreciation. How much provision for depreciation? 4,65,000. Now balance of old machinery, balance of old machinery, it comes how much? Out of 12 lakh subtract 4,65,000. 12 lakh minus 4,65,000. It comes to rupees a balance of 7,35,000. Okay, here I have to go for part 1, part 2. What is the balance of part 1? 1,45,800. Then part 2 will be how much? 7,65,000 minus this. It comes to 5,89,200. This is about your old machine. Now what to do? Now I go for table. Old machinery. This is about new machinery. Here I go for 2 sections. Part 1, part 2. Now, this is part on what date? On 1st April 21. Okay. Let me move on. What is the part 1 old machinery balance? 1,45,800. What is a part 2 old machine? 5,89,200. Okay. When this new machinery is purchased? New machinery is purchased on when? On October 21, new machinery is purchased for 4,80,000. On October 21, 4,80,000. Now I write on 1st April 21 as a balance. Did you understood, my dear students? Now what happened here? The part 1 is sold. Part 1 is sold on October 21. When the part 1 is sold? On 1st October 21. Part 1 is sold. How many months? April, May, June, July, August, September. It is a matter of 6 months, right? Depreciation for 6 months. On which part 1? 1,45,800, 10% into 6 by 12. Use a calculation and work out, it comes to rupees 7,290. Now sold part 1. Part 1 is sold for how much? See, part 1 is sold for 1,10,000. Now you work out a balance. I think we are getting positive, it seems. 28,510. Since we are getting plus, it is a loss. Now, let us move on. The end of the year, that is 31st March 22. Depreciation 10% WDV, that is written down value method. On part 2, we have to calculate for 12 months. On the new machine. See, new machine is purchased on when? October 21. 1st October to 31st March. October, November, December, January, February, March. It comes how many months? It comes to 6 months. Now let us work out depreciation. On this it comes to 58,920. Am I right? On this we have to work for 6 months. It comes to rupees 24,000, like 4,80,000 into 10% into 6 by 12. Now let us work out a balance. The balance is to be worked out on what date? On 1st April 22 as a balance. How much we are getting? Subtract out of this, we are getting 5,30,280. Here you work out 4,56,000. This completes all your working. What method we have to follow? See, we have to follow the provision for depreciation account. In such case, in machinery account, we have to take the cost. What we have to take in machinery account? We have to take the cost, but we should not take the balance. Please remember, in machinery account, we have to take the cost, but not the balance. So now let us move on to the machinery account. For which year? For 2021-22. We have to prepare for only 1 year. Now let us write. Is the machinery account right? On 1st April 21, to balance brought down. What to take? Cost of which machinery? Old machinery. What is the cost of the old machinery, my dear student? The cost of the old machinery cost is 12 lakh rupees. What we have to take? We have to take 12 lakh rupees. Did you purchase any machinery, any new machinery? Yes. New machinery is purchased on October 21. To bank account. New machinery is purchased for 4,80,000. Did you sold any machinery in 2021? Yes, on October 21. Buy machinery, disposal account, cost of part 1. See, what is the cost of the part 1 as per your calculation? The cost of the part 1 is how much? 2 lakh rupees. Then dot for the dates. By balance carried on. Work out the total. How much we are getting? It is of 16,80,000. 16,80,000. It comes to rupees 14,80,000. Then we have to write on 1st April 22. To balance brought down as a 14,80,000. मालूम हुआ क्या लिखे मैं? मालूम हुआ? Since we are preparing machinery account under the provision for depreciation account, right? Since you people are following which method? Since we people are following provision for depreciation account, since we are following, please remember, since we are following provision for depreciation account, which account we are following? Provision for depreciation account. In machinery account, we have to take only the cost of the machinery but not the balance of the machinery, that what we used to take in earlier problem of class 11 or 12 it seems. Okay, when once you took the machinery balance, mean cost, you have taken the new machinery purchased. Here machinery is disposed, transferred to disposal account with the cost of the part 1, then carried on brought down. बाद में क्या करना हम? We have to prepare provision for depreciation account. That is also for only 1 year. That is also for only 1 year. Here it is a liability, right? Liability means it is what balance? It is credit balance. 1st April 21 by balance brought down, that is provision for depreciation. How much provision for depreciation on the opening date? See, the provision for depreciation is 4,65,000. Fine. This is on April 21, right? What happened in 21 year? See, in October 21, there is a depreciation of 7,290 when October 21. That is 1st October 21. Let me have little bit more space for a date column. Let me have a little bit more space for a date column. Okay. Now on what date? On 1st October 21 by depreciation on what? On part 1. How much depreciation on part 1? 7,290. Now at the end of the year 31st March 22, by depreciation account it is on part 2 plus new machinery. What is the depreciation on part 2? 58,920 and on new machinery it is 24,000. Add both the numbers, I think it comes to 82,920 it seems, right? 82,920. 82,920. On the same date of October 21, disposal is being made, right? 1st October 21, to machinery disposal account. Total depreciation on what? Part 1. See, what is total depreciation on part 1? On part 1, 2019, 20,000. Full depreciation we have to take 20,000 plus. बाद में 18,000 प्लस, उसके बाद में 16,200. Okay, you have taken 1, 2 and 3, right? उसके बाद में कब? Here on October 21, 7,290. Add all the 4 depreciations, it comes to 61,490. To balance carry down. Now you work out the total. What is total depreciation provision? 5,55,000. 210. Work out a balance, it comes to 4,93,720. Then you go for brought down on 1st April 22. By balance brought down 4,93,720. Now what we have to prepare? We have to prepare machinery disposal account. See how to prepare the machinery disposal. You know very well from the previous two problems, right? See what happened. First, in machinery account, you have written buy machinery disposal with 2 lakhs. Buy machinery disposal. Here we have to write first October 22 to machinery account, cost of part 1 is 2 lakh. In machinery disposal, in provision for depreciation, you have written to machinery disposal, to machinery disposal, to machinery disposal, 61,490. For that we have to write 1st October 22, 22 or 21, I think 21. It is not 22, my dear students, it is on 1st October 21. October 21 sold, right? By what? Provision for depreciation account. Total depreciation on part 1. It is how much? 61,490. बाद में on the same date buy back sold. See, the part 1 is sold for how much? Part 1 is sold for how much? 1,10,000. Then there is a loss, right? By P&L loss. See how much loss? The loss is 28,510. Now you close. See whether it agrees. Yes, it agrees with an amount of rupees 2 lakh. Did you understood, my dear students? This is how we have to prepare the 3 ledgers. What they are? One is about machinery account, provision for depreciation account, machinery disposal account. Especially the depreciation problem seems to be difficult when there is a balance of the old machine. There we have to give the lot of concentration. I hope you got it. Please go through it very effectively and very carefully. Namaskar. All the best. Bye bye.